Okay, so welcome everyone. Thanks for joining in to this new session. This is the FXTO, the Tokyo Open session. Today is Thursday, January's gone. It's February the 4th. Welcome everyone. It's been a very good week, tiring, but very rewarding week, and I hope you had a good week as well. The week is almost finished. Typically, for me, Friday it's typically it's not a trading day. Very rarely I trade on Friday, unless there is something important going on. So welcome. This is the Tokyo Open Live room. It's a daily show with the features real trading with me. I'm the FibStalker, Giuseppe Basile, also known as the FibStalker. I stalk price. I promise that I don't stalk people. Thanks a lot, Fame Home, Pantelis, welcome. Desi, we have Scott, Pantelis, Uzo, FX Ambassador, Easy Lee, FX Goldie, Pedro, hi Pedro, Scott, and I might not see other people, so bear with me. So this is real trading at the heart of the Asian session, and it's a daily show, a daily trading room from Sunday to Thursday from 8 to 9 p.m. EST. So thanks for joining. As usual, I want to remind you that trading is risky. Trading Forex and its derivatives, futures, options, and CFDs and other instruments with retail off-exchange transaction involve substantial risk of loss, and it's not suitable to all investors. You may lose all or more of your initial investment. Leverage can work for you as well as against you, magnifies gains as well as losses. Past performance is not necessarily indicative of future results. You may also please review the FS Street risk disclosure on their website. The information on this website, the information including commentary and trade ideas provided in this webinar should not be relied upon as a substitute for extensive independent research which should be performed before making your investment decisions. All the idea and the material I'm providing here is for educational purposes only. I, Giuseppe Basile, FibStalker Consulting Incorporated, FX Street, will not be responsible for any losses incurred on investments made by attendees as a result of any information in this webinar. Okay, so I'm not a registered investment or professional, and if you need legal, tax, or other assistance and you require this, you should seek the services of a professional and competent professional. Okay, so this is very important, and as you know, I'm one of the webinar contributor at FX Street. And this year there are news. There are a lot of other contributor, very high level, very good material, and so I can only very deeply recommend that you get a subscription to the webinar service. Okay, so. Thanks a lot for joining in. Let's look at the chart. We are here for days of course, and this market has been absolutely interesting, and you know, I can really not complain. It's almost like this week I asked, and the market has actually responded to my will and my call. So. I'm very happy, of course, and I want to say hello. I hope everything is good. It's been an exciting week, and I just wanted to say hello to everyone, and we can dive right into the charts and see what's going on here. Should be able to see the charts here. Let me share. Let me see the. Let me put the chat here so I can see your questions. As usual, you know very well in this room, I never shy away from considering answering and getting questions. So if you have questions, please write them down, and and I'll be able to see them if I can see them and answer them. So Jax, Joe, thanks for coming in. Pantelis, Scott, we have Fame One, and Jax, Joe, and others are joining in. Welcome. So let's look at this market. Particularly, I'm going to review first the three market I have position on, which are the ones that you see here on the screen. They are behaving beautifully. The first one is US dollar Japanese yen. You will remember that we mentioned a potential participation into the level. That participation came and kept pushing this price lower now for the third day in a row. Okay, so Irina, welcome in. So if you can see on the screen here, the US dollar Japanese yen, we took two shorts at the near 121, and the market is now 116. As you know, I have a target for this market 114.90, and it's possible you're going to see that level being tested at the beginning of next week. So some people believe that this is a support for this market. There is not such a thing as this support, believe it or not, because algorithms have been pushing this price lower, and algorithms will actually try to push this price into 113.66. I believe that will be stopped before. And as I mentioned, 114.80 is going to be our target next week. So here we have I have in two positions around 23 unit of risks here. So that's what I would like to realize somewhere next week. We will see if the market will actually offer us that target. FX Ambassador is saying the pound versus the Japanese yen heading to 169.50 level now. That's a beauty. That's one of my targets, by the way. So let's review this market as well. This market is moving in tandem, and it's very, very close to that target. Now, this market could continue lower, but as I'm carrying also the US dollar Japanese yen, I will realize I have three positions in this market, and I will realize all of them at this 169.51. This could continue lower, but this market has been much weaker than the US dollar Japanese yen. And if it continues lower, I'll try to pick up a continuation. Let's don't forget that this market has all the potential to move into let's look at the chart here. The pound versus Japanese yen is this chart here. And you remember that we timed this market and we mentioned the fact that there was participation of 165.05. We took two positions here and another one on the way down on the daily time frame, and this market has the potential to move into 156. Now, this market will eventually move there because there is nothing below it. It's just a matter of how it's going to get there. So, FX Ambassador, you're absolutely correct. And that's the level that is going to be tested in probably tomorrow, within the week, or maybe on Sunday. We don't know when it's going to come, but that is going to come for sure. Very soon. Now let's look at the bomb here. Let's look at the real great opportunity we have in this market. You remember that 2 weeks ago, when this move had already started, I mentioned the 137.60. I've been trapping in this level for now almost 2 weeks, and you know that I mentioned that once the market will get there, there is a potential for the market to stop there and algorithms on the weekly time frame to come in, and that's exactly what is happening here at this stage. We had the 4-hour time frame confirming already, and the daily time frame has not confirmed yet, and is going to confirm when we see basically when we see the we're going to see this level confirmed here. the daily confirmation on the daily is going to come at much higher prices, above 139.29. Okay, but the 4 hour is confirmed already, and I have 2 risk-free trades. So this market for me can do whatever it wants. If it goes below previous lows, I'm going to be stopped out at break even. So I'm not worried at the moment, and that's one of the advantages and powers of using Phillies trades. So you can actually sleep during the night when you're not trading, of course. So this is what we saw in the last 8 hours here. We saw this price recovering nicely and giving us Phillies trades. So I'm pretty excited and happy about this market. I mean, I'm not excited because, it's not convenient to get excited about the market. But keep in mind that this is the US dollar, Canadian dollar. So it's going higher because the Canadian dollar is going lower compared to the US dollar. So what's happening here is that the beauty of this chart is that we have such a huge potential at this level. See, if algorithms come in and confirm also on the daily, look at this beauty. I mean, we have the potential to go all the way from 137 level here up to 158.38. That's almost 2,000 pips. That actually more than 2,100 pips there. Okay, so it's huge potential. Is this going to come in 1 week? No, it's going to come in several weeks, actually probably several months. And so you have to be ready to look at the swap commissions, which are negative. So for this position, so but we're not talking about huge amounts. So we will have, I hope very much to have swap cost for this position, which means that I'm carrying it into that target. It's going to take multiple months. The point is that if and as this market moves higher, it's going to give a lot of opportunities to actually participate also in intermediate moves. So this is very interesting here, and there are very good developments here. So I will keep following these prices, and particularly here we have the pound versus Japanese yen, which is actually moving now into that second target. Slowing down here at this first target because there is some profit taking from the shorts. That actually one of the shorts was very close to this level here. This was a level watched by algorithms, 172.38. And so once the price gets near 169.50 here, I will actually exit all the position in this market. I'm not going to carry this market like the US dollar Japanese yen because it's convenient also to realize profits when the market is offering them, because the market can change very, very quickly. So it's always good to actually bring in some of the profits. And this overall is going to be probably a 6 to 7 reward to risk, this 3 position on the pound versus Japanese yen. So I think it's very, it's quite, it's a sizable gain. Now, we are seeing here US dollar, Canadian dollar moving lower. When I see these kind of things, I'm not worried any longer, because this market offered 2 entries, and both of them, they are risk-free. Means that half of the position is out. So I'm not worried if this market retraces. It can retrace also very, very close to the lows here. If it doesn't take out the lows, we'll still be in the position. Actually, every opportunity at this stage for this market to correct might become a new opportunity to enter. As I mentioned also before, when the market reverses at these large levels, it tends to kind of going a little bit zigzagging, and if you are capable of timing when it moves lower and then reverses again, there's a possibility to add to the position. Okay, so at the moment this position is risk-free. So even if the market actually stops me out and goes below lows, I'm not going to be worried. If there are any questions, please you can write them down. Pantel is saying 8 EM, we are 9 in TTL. With you included, G. I mean, today, Pantelis, you are very cryptic. If you can expand on that, that would help me a lot. But I suppose you're talking about reward to risk. But I cannot really fully understand that. Okay, so going forward, then what we can anticipate? We anticipate a continuation of this move. Now, before I get into, Jake is suggesting, can you review the pound versus Canadian dollar? Before I get into that, I want to speak about not only of the things that go well, also the things that do not go well, or they do not as planned, right? So there are two markets I want to comment on. The first one is the euro versus Australian dollar. You will remember that I took a short here, then never went into my target. So at some point, I was obliged actually to exit this trade with 4.5 unit of risk in gain, which is not to be thrown away. The point is, these levels are not always respected. Okay, so I just want to mention that for accountability here. And the other trade that didn't go as anticipated, but yet did not did actually provide us with a furious trade, was the trade that you remember we took here before this market actually exploded higher with the euro, and the market though moved lower sufficiently for us to get a furious trade. Okay, but then we have been stopped out. So this is just for accountability, because I want to project the impression that we are always right 100%. Nobody is right 100%, certainly not me. But what is important is to make sure that when the market does not agree with you, that you manage your stops and your losses, and then when you have moves like the one that we saw here in the US dollar Japanese yen, you want to fully take advantage of this. We took a position here because we knew that algorithms were pushing this price lower after this bounce. So this is a big win and not unseen in the past. I mean, you will see these things more and more. And if you subscribe the FibStalker Methods coaching program, you will learn to spot this well before the fact. In fact, you will remember we actually spotted this 121 well before the fact, when there were other traders and analysts who actually were projecting the US dollar Japanese yen to 130, 131. And while every view has to be respected, and I deeply respect it, of course we have to keep trading what we know, right? Pantali is saying, no, at the time I was referring to how many people were here today. Okay. I see 13 people online, plus some of them I don't see. I see some comments sometimes of people who are not in the list. So anyway, I saw that there are also a lot of people. I think so far it's around 100, at least last week. I think this week has been has increased as well. Todd is here as well. Hi, Todd. Welcome back. So I think it's a very good experience. I'm pretty happy about it. Now, before we get into the pound versus Canadian dollar, should be the next market I look at. I just want to comment a little bit on the euro dollar here. What's going on in this market? It's very important that we understand what's going on. And this market obviously closely tracks the dollar index. In fact, we know that the euro, it's around 63, 64% in composition of the volume of the dollar index. So these two markets, the dollar index and the euro dollar, move one against the other. Now, although they move one against the other, each and every of them has its own nature, its own setups. So in this case, what happened here is that at some point, the 107.80, the 108 here, has been respected and actually has brought price into the first target. Now we are challenging this 112.66. If that happens, we have a potential for a continuation higher in this market. Okay, so and that means that the US dollar would need to go lower, and that would bring lower also the US dollar Japanese yen. I mentioned for the US dollar Japanese yen 114.80 as a target, but that could be, that the market could, that market could continue lower as well. And there's another level that you're going to watch. It's a weekly level. If that is broken, you can kiss goodbye that market, and we're going to see a much lower prices there, which would suggest much higher price in the euro dollar. I want to mention one thing on the euro dollar. The euro dollar has a potential to move all the way into, believe it or not, 122. And that would be the next level of resistance. FX Ambassador 115, it's support. It is for sure support, but it is also a place where algorithms come in. We don't know. We will need to see that. We'll need to test that, right? So, I'm always very, very open what can happen in the market. What I know, for example, for the euro dollar is that 122.30, it's a possibility, and it became a possibility. It's going to become a possibility, especially if the shorts here, they give way. If we see the price moving above 12.61, we are very, very close to that level. So if that happens, this market might start moving in extension and bring very, very quickly price into 122, which is 1,000 pips. Okay, so you have to anticipate everything in this market, and this level will be the next measure move in short for this market. Okay, so if that happens, there's going to be a great opportunity because it has the potential to actually, bring price into from 122 to 102. So it's going to be 2,000 pips this time on the downside. Now that's not a business that happens in few weeks. I mean, this measure move to be completed took several months. Actually, almost 1 year, 10 months. Okay, so if you want to do 2,000 pips in the euro dollar, there may be an opportunity here coming up in the coming weeks. We don't know if that is going to happen, if that is going to be. If it's in the cards, so to speak, that whenever this opportunity come into play, we want to take advantage of that. 115, it's a level of participation from algorithms. If it does not hold, you can kiss goodbye this market. This market is going to retrace all the way, at least all the way into the all the way back here. So, and that's 100. So we have another 1,500 pips, 1,500 pips to go if that happens. So I think we have to be very, very open here. Okay, if you have any questions in relation to this, please write them down. I'll be very happy to answer them. And as you write, let's go and look at. We said GBP CAD. Okay, this is Pacific. How would you call it? This is a Pacific play. It's not a Pacific play. It's a European play. It's a European European American cross here, and I don't look at this market because it's not as technical as other markets, so it does not respect the levels as other markets do. So because there is less volume in this kind of pairs here, and we saw this market moving in extension. The market then came to try to trade a measured move here, but didn't make it. So it started moving in extensions there. and at the moment is moving lower, and it has retested this level 2 times already. Well, not just one. It's going to retest this level if this market breaks below 195.59 here. You can kiss goodbye to this market as well. I think we're gonna see a bigger move lower, and this makes sense with the weakness of no, this does not match the weakness in the Canadian dollar. Would mean that the Canadian dollar would actually be stronger than the pound, and there are very few I think few currencies at the moment that are weaker than the Canadian dollar, and probably one of them is the pound. The pound is on its knees, actually, I believe. Any questions in relation to this? I think Jake was asking for this. Jake, this is the situation on the larger time frame, and there is a short here which is actually supporting lows here. So I think it is very possible that level is going on the downside. Okay, I hope that helps. If you have any questions, Jake, write them down. I'll be very happy to answer. And actually, do you know what I'm gonna do? I'm gonna actually put the pound versus the Canadian dollar here, so we can track this in the coming days as well. You're very welcome, Jake. So I have Todd that is suggesting that the pound versus US dollar is currently consolidating. I traded this, as I mentioned, as you know as well, I traded this level here. I think some of my rooms also, in my room also have traded this level. It offered a free trade and then it broke higher. Now, whenever that happens, I just leave the market away, right? I don't have to necessarily short this market. Now, this short might work, but there are so many opportunities around when we turn around that there is really no reason to focus on one specific market. Okay, so I always try to go with the best opportunity, be very, very selective about the market. In fact, I've learned with my experience that, trading is really a selection process. It's an elimination process where you have to eliminate the opportunity that have less probability of working, and just go with the ones that have a higher probability of working. For example, like the US dollar, Japanese yen, as well as the pound versus Japanese yen, and I believe the the US Canadian dollar also can work. Now, if someone looks at this chart, right, what they see, days and days and days that the market has actually sold off, right? So this may be scary in a way. However, when you put this market in context, right? I mean, when you put this market in context, and you zoom out, you zoom out, you zoom out, you zoom out. This is what you see. This is not a market that's going down. It's a market that's going up. Right? It's just correcting into a level, but look at this. How could you say that this market is going down only because you saw the last 3 weeks? In fact, it is not going down. It is going to previous highs. And where are they? Okay, where are they? They are right at that second target of this measure move here that we have at this stage. Can the market get there? You can bet it. How long it will take to get there? If it gets there, it's going to be a few months. So if you can stick with this kind of trades, there is maybe 30 units of risk to be made in this trade, and maybe much more if you keep adding as the market moves higher. And if you use the free risk trade, if you're stopped out, you still have the previous positions. You probably have an hedging account, Forex hedging account. The majority are all hedging account, which means that when you open a new position, when you add or open a new position, it's indeed a new position. So is something that adds up, and you can consider that position separately from all the others. Okay. Now, so pound versus US dollar, we can review that if you wish. I mean, I don't think there is a lot of gain in reviewing it now, but this market, you know, as a target, we know it as a target, okay? And if you remember, I mentioned that we don't know where it's going to stop. Actually, we had an idea and we had also participation, but that didn't hold down this market. Where is this market going? This market is not going higher. This market is going on a smaller time frame, is going higher because there are algorithms that are pushing that market higher into what? Into the next level of shorts. Okay, because this market is going lower, it's going into 130, into 139.50 here. Now the question is always is how that market is going to get there, and that's the point. That's the main point. Okay, and so our job as traders is to take decisions, and the quality of our decision decides how much we can make out of these opportunities. All right, so where could be that level for this market? You know, unfortunately, when the market, you know, in these specific situations, I mean, if the market is here, we know that that's an important level. We can take a position short. If the market is retracing, you know, a position, it's not always easy to understand. Okay, now this market is not particularly technical. In fact, this is not one of the market I follow because I like to follow markets that are very, you know, I have very high volume and respond well. So we will need to find that level, and there are two ways to find it: before the fact and after the fact. After the fact is still useful to find those levels because we have targets and we can use those levels to actually project the next measure moves, the next levels where algorithms might attach themselves. It's very important that you keep doing the analysis, and that's always what I do. Now, one level that could be of interest here is 147.10. Is this the level where the market is going to reverse? We don't know. The point is that this is the high probability level, next level that that I have here. And if the market gets there, one could consider taking a position. Of course, the market might be reversing here because the algorithms are attaching themselves to different levels, and we don't know that. We can only learn that after the fact. For example, if the market are attaching to this level, and we don't know that, in this specific case, we don't know. It's not always like that. Very often we know, and we know that in advance. For example, we can get the same example here, right? Once the market has printed these lows here, this level, the 158.77, was known. So even if you don't know what the market is going to do, you just follow the market every bar, every week, and then eventually the market gets into that level, and you have to act, and that is when you have to get a decision. And actually, acting and getting decision, if you don't have a framework in mind, if you don't have a well-defined process to define these levels and well-defined process to follow these trades, you're never going to get involved here, which is exactly what you have to do. In fact, that's what the market did. Okay, so it's a psychology game, of course, and you have to know what you're doing, and you have to be sure enough about these levels to trade them. And one of the efforts I've been doing in the last 2 years is to put together material and a course that actually helps to structure this kind of analysis in a way that can be repeated consistently. Okay, so that's the idea here. So you know, at the moment I'm not excited by this market because before I had a level that was very dependable for me. And it's something I could trade against because we always have to trade against a level. And the only interesting aspect of this is that there was a previous measure move that got exactly into target. Sorry, which one was that? It was not this one. There is anyway this market. You know, it's overextended at the moment, so it's actually correcting because overextended. Will it go now from here, down from here? We don't know. And at this point, I'm not interested in trading this market because I have no edge in this market at this stage. Okay, so Todd, I'm not sure whether that actually answers your questions, but see, we don't have always edge on all the markets. Now, you could decide to trade this market, and I wish you good luck. I don't have any edge in this market, so I'm gonna move. I'm gonna move on and look at markets in which I have an edge. Even if it's a temporary edge, I want to have an edge. Okay. I hope that answered your question there, and I think that sometimes if we try to force a position in the market, we will always be wrong. If we try to force a short here, and to me there is not enough evidence for a short, I'm trying. I'll be ending up trying to force my will on the market, and we know very well how the market pays back when you try to do something like that. So you're very welcome. So I also want to thank if there is anyone who actually today has was in my webinar that I had in the morning. If you were there, thanks a lot for joining in. I just want to remind you that I'm going to touch every now and then in this room on the continuation style. What is a continuation style? It's not like the it's actually a technique that you can use to enter moves, continuation moves, so-called continuation moves. Okay, and there are plenty of these examples, and I don't know if you remember 2 or 3 days ago when we were reviewing the euro, and I mentioned that, and I was looking at the euro in a very, very large time frame. Let me go back to that. Okay, I think it was, I don't remember if it was a large time frame, but it was for sure. It was, let me see here. It was for sure at least 4 hour, or probably was daily time frame. But when I was looking at that, and I think it was the daily. So let me go, bear with me here. Let me go back to the daily. And you will remember that I mentioned something like, I see a flag in this market, and this market could actually break out. Now, it's very easy in hindsight, right? But that's not the way. That's not the way I look at the market anyway. But I mentioned that there was a flag here. Okay, so this is a very good example of a continuation move. There is a first move higher, then there is a consolidation that can take actually the shape of different type of formation, triangle, flags, bases, and then there is the next measure move, and this is the continuation move. Okay, so if you are looking at this market, you could actually apply the continuation move strategy. Now, the reason why I mentioned this is because I'm gonna showcase the setup here and the engine, the way you would have entered this according to the continuation style, but also want to take the opportunity to actually point you to some of the resources, and most of them are free resources, although I heartily recommend and suggest you become a premium webinar subscriber on FX Street. And the reason for that is there are literally tens and tens of presentations and webinars. And if you're serious about trading, you have to get the language, you have to get the understanding, you have to get ideas from other traders as well, and experience as well. I've studied for years with several traders. I started in 2001, and actually this year I will have probably between 19 and 20,000 hour of screen exposure. So that's a lot of time that I spent on the market in my life, and maybe even too much, but I'm glad I did. Now, the reason why I'm talking about this is because I want to show you in this page, this is my page. You can go and search for my name here, and it's not about me, but it's about the material that you can find here. Okay, and particularly you will find seven presentations here, 7 webinars, which are dedicated to the continuation style, starting from November the 11th. There is the introduction to the continuation trading system and Forex, and for Forex and stocks. And these 7 presentations are all, the last 7 presentations here are all part of this course. It's a mini trading course that features the continuation style. Okay, so my suggestion is that you review, first of all, you review the open webinar here, and you get a basic understanding of this trading system, which can be very, very lucrative and useful and simple to apply, and enough simple to apply also for traders who do not have a lot of experience and are starting now. It's very, very intuitive. At the same time, it has a very good reliability and expectancy as well, just some of the measures of the quality of the trading system. Now, what is interesting here is that in part 6, I also give you a formalization of this trading system. So it's a 3-page system that I give and describe in detail in that webinar, which gives you step-by-step the rules that you have to follow in order to apply this system, which is, if you think about it, it's a beauty, right? So this is to recommend to actually review these webinars, and I heartily recommend you actually become a premium webinar. And I really believe, I myself, watch some of the webinars because there is a wealth of information here, very, very valuable, and I really believe that FS Street is giving this for peanuts. So it's a wealth of information that you can use if you're serious about trading to create your base knowledge. Now, I probably have not switched to the page, so I talked a lot, but I have not shown anything. So let me actually share this with you. The window I was talking about is this one. When you search for my name here in the search bar, you'll get this page, and in this page, if you scroll and open the years here, the different years, you will see a lot of presentation. And I was talking about the set from November the 11th to February the 4th, 7 webinars that you can review, and this will help you applying the FibStalker. Sorry, this is the continuation system. So I will feature the continuation system every now and then, and in fact now I want to show how you would apply it to the recent move in the euro dollar. Okay, and we will be honest when we do this exercise. I like to be accountable. I like to be consistent in what I do, and I think we have to be honest as well. And that's something that I always apply also with my students, and I'm very transparent, and I never shy away from answering questions, even the most difficult questions. So if you are looking at this market, right, and let's say that you didn't know the future, because obviously when you look at this market, you don't know the future, right? And maybe let's say that, this is not necessary, okay? But of course, when you use the FibStalker levels, you also have additional information about the market. But let's suppose that you didn't have this. The information is that something that has not held here, now it's holding. Now, but let's suppose that you don't have this information, and you observe that it looks to you that the market actually moved higher here. And this was the move in the market, right? The first move. And then there was a kind of consolidation. The market stopped moving higher, but kind of started started a little consolidation here, and initially looked like a flag, right? But then at some point you saw that this market actually has respected this level and started moving higher. So one thing you could do and say, what if this is a triangle? Okay, and as you can see, as you study this market, you start seeing the pattern, you start seeing the first move higher and then the consolidation. Okay, now when you have the consolidation, if you review one of my if you review one of those presentations, you will see that I also talk about reliability and expectancy, and I also show ways to optimize the entry. So I'll let you watch those webinar first. But here, you know, here, let's say that we have this triangle here, which is a symmetrical triangle. So there is a high here. And so you could say, look, I mean, I'm going to put my entry above the last high that corresponds to that trend line, which is the third. And it's a confirmed trend line because it tests the price for a third time here. It's real, so it's kind of real, right? And then the market gets above that level, but oops, went too fast. Above that level, but never breaks above that horizontal level. So you never have an entry. And if you had an entry, you could put a stop in a different place. You could put a stop here, or here, or here. Okay. But let's talk about the entry first, and then we look at the stop. So what happens here is that this market goes here and goes above the level, but it does not break the next high here. What happens then is that this market moves again into that low of this pattern, and again confirms the pattern, confirms this trend line here, because it tests that for the fourth time. It's 1, 2, 3, and fourth time, right? So it's 4, you can even say 5 or 6 times, but I'm being conservative here. So you say this trend line is real. Now, what you want to do in order to confirm an entry is that you want to see a higher low, and you need to see a higher high as well, okay? Because that would be the only condition that tells you that the trend has indeed reversed. And the trend has reversed before. We saw lower lows, and lower highs, and at some point the market put in the low, and then we start seeing, you know, we didn't get higher highs here, we get higher lows, and then we don't get higher highs, we get higher lows. The next time we get higher highs, there will be an entry. And that's exactly what happens here, because the market breaks above this level. Okay, so it breaks above this level after showing higher highs here, and the entry would have been that level or the lower level as well. Now that's not the best setup you can have, because the best setup I want and I want to see when trading this pattern. Actually, I used to trade this pattern in the past because I believe the FibStalker methods are much more powerful than this. But there are times in which, on the smaller time frame, I revert to this because it gives confirmation, or because the FibStalker method is now working on that specific time frame, on that specific moment. So sometimes I might use this as well, not that often, but I might use it. Now, the ones that I like the most, it's when the market breaks and goes above the previous high and then comes back and puts the higher low. And that's when I get very, very excited, because they're very, very dependable ones. Okay, so I just wanted to make a digression here in order to explain this, and we will see a lot of these examples going forward. Okay, I just wanted to share this. Now, let's look at the. Sorry, I don't know where my window went here. So Are there any other questions? Sometimes I don't see the questions on the chat, so there was one participant the other day sent me a full list of questions they never saw because they never showed up in the window. So if you have any questions, please let me know. Okay, so going forward this week, I think it's I will spend 2 minutes on this, and then I will do a recap on what we have seen in this review. There were no trades in this review. I mean, the market are actually digesting the big moves that we saw in the last 2 days here, 2-3 days. So going forward, then I mean there's a huge opportunity here in the US dollar Canadian dollar. I strongly believe that. Don't be worried about these markets moving lower. Of course, it could move lower into the previous low, but remember that the 4-hour time frame has already confirmed this area of support. The daily not yet. When that will come in, I will have no doubt that this level is going to hold. Okay, and if this level is going to hold, what you see here is the low. It's going to be a very good stop loss level. Okay, so this is the biggest, more interesting opportunity that I can see going forward for next week as well. Next week we should see also the US dollar Japanese yen correcting and getting into target. Okay, so I will now start a review, a recap of this session. So we looked at the US dollar Japanese yen, which confirmed the level 121 into 114.90. That level is now confirmed. The target of this move is confirmed. Even if this market goes around for 2-3 days and stays where it is, eventually it is very highly probable that this market will get into the 114.80. Okay, so I have little doubt about that. At the same time, we should see the pound versus the Japanese yen, which is the other market that we took shorts on, going into the all the way halfway back. Okay, the all the way halfway back of the recent move. And the 169.50 is the level where I'm going to take some of the profits. Should be 6 to 7 unit of risk here. I carry multiple positions on the US dollar Japanese. All of them are risk-free positions. And this would actually complete my average objective for every week is 4 to 5 units of risk in gains. This would actually be my weekly return in a way. But during this week, we also opened other position. For example, the US dollar Japanese yen. If it gets to target, it's going to be for me 23 units of risk total. Only this trade. Okay, so these are two trades that are going to be completed between tomorrow and the first 2-3 days of next week. So going forward, where we are going to look for opportunities. I mean, I like very much the US dollar, New Zealand dollar, US dollar, which actually, when we put things in perspective, it has been trading longs recently on the weekly time frame. So when we move into the weekly time frame and look at the New Zealand dollar, US dollar here, this is something very, very interesting, which is the positive retest of this large 50% level. What a beauty. Okay, so what's going to happen now? What is going to happen is that this market will go higher simply, and can be as high as, again, all the way halfway back. Okay, so there'll be 0.7521. We are at 0.66. 96, 67. So talking about 800 pips here. It's huge potential. Again, it's not going to happen in 1 week. It might happen in few weeks here. Okay, so I'll be looking at this market, as well as I'll be looking at the euro dollar, which is also now came nicely out of that ugly move that actually lasted 2 months here, and now this market is going to offer us potential opportunities for continuation higher in extension. So it's a very good market to follow here. For the rest, we will see what the week is going to bring. Tomorrow I'm not going to trade. I'm just going to rest unless the US dollar Canadian dollar offers opportunity to add. And this is something that I want to watch carefully. As you can see, this market has no reason to push lower. When you see this push lower is smaller time frame taking and then the long time frame just stepping away. These algorithms are manned algorithms. They are controlled. They are automated, but they are semi-automated, controlled by humans as well. And what we do, we just try to understand where these algorithms are buying and selling, and we basically follow the footprints of the giants here, of the elephants, and that's what we try to do. So this market is going to be very, very interesting, and it might offer multiple possibilities probably at the beginning of next week. FX Ambassador is suggesting yen crosses, looking very, very good. And yes, I mean, they're safe trades. I mean, even if there is a huge event and this comes off the halfway back, I won't be worried. I'll just stick with it. But that's not going to happen. And again, if you believe that 15, 16, 116 here is going to be support, you'll be very, very disappointed, believe me. And the market might prove me wrong. What I say, of course, is not important. It's what price is going to do that is important. So my opinion are not something you should. Even I don't take my opinion seriously when it comes to the market, because in the end. No, I don't suggest you exit the trade before an NFP, because NFP could just keep moving this price lower. And actually, that would be one reason why this market would actually get into target, this week. So let me open the news here. Let's look at when that trade is gonna carry that news. Is going to come. Typically, it's in the morning of. Don't know if you can. Let me show you this. This is. Let me share this. Just bear with me 1 second. If we still have some time here, I can actually share this, and we can quickly discuss this before we close the session. These are the news of the week. And we have the non-farm employment change is going to be 8:30 a.m. tomorrow. I mean, this kind of news, they can bring price one way or the other. The point is that, I'm going to stick with this trade, and even if this retraces a lot, half of it, you're still going to be okay. And actually, we don't know how this news is going to move the market, okay? But I'm not going to be worried tomorrow that this can hurt this trade, because even if this market retraces into 118, I'll be even if it's 200 pips above these levels. What I'm interested is in the long-term behavior of this market. What if, on the other hand, the news keep pushing this price lower? Because do you know what the news is going to do to this price? And by the way, let me ask this question: does anybody know for sure what the next news is going to move? How the next news is going to move this market? Can you give me your opinion, or a yes or no, if you know or you don't know how the news tomorrow is going to? You're not seeing my chart. You're right. So let me share that again, and here we go. Okay, now you see the charts now. So what I'm saying here is that Do you know how the news tomorrow is going to move this market? Who knows that? Maybe only the people in the know it. You know, maybe the insiders know it. The insiders know already what is the NPF tomorrow, right? And FP tomorrow, because there have been some people, government people, who actually have put the numbers together. So Lee, it's actually proposing the best answer there. The market can do anything. And if you read a book from Trading in the Zone, which I believe is one of the most useful books in the world, believe it or not, which is the book from Mark Douglas, I had a lot of difficulties at the very beginning, try to put in practice those principles. In that book, there are 7 principles and 5 rules of the market. And for years, I've been telling myself, how do I implement this in my trading system, in my system? And the only way to implement what Lee has just mentioned, that the market can do anything, is to have a free risk trade. If to have something built in your trading system that actually puts you on the side if you're wrong, or if the market does exactly the opposite of what you had anticipated. Okay, so this news tomorrow can bring this market higher, or it's going to bring this market right to target, and we're going to complete this trade by Friday, which is not impossible. Look at how many pips he moved on Tuesday here. Okay, sorry, on Wednesday. He moved from 120.03 to, intraday 117.08, 300 pips, and then, it went back a little bit, 220 pips. Okay, so this is insane. So if we move 220 pips from here, it's 116.79. It's going to be 114. 69. So it's going to get into our target here. Okay, and if that happens, if the news is going to move, and actually the news might move this market temporarily into the target and then bounce as well. So there's so many opportunities that doesn't make sense to make consolidate, make some considerations here. Ras is saying, I think that first the spike will take out all the shorts by spiking high, then the real direction that will happen. And my question would be for you, Rusty, are you short? Are you short this market? Because this seems to be a little bit biased. But even if that happens, retracing from 116.91, 117 to 121 will mean 400 pips. So now everything can happen, but doesn't seem very likely. And why would algorithms be placed in this direction? They could have been placed in long direction, which they didn't do. So you will see that this positioning is very, very consistent. We could get something like what happened here on August the 24th. You never know, right? Anyway, we will see tomorrow. I'm not that worried. I will stick with my position. The stops are in, the positioner is free, and I hope the same for you. I know for sure that some of you have the similar situation. So hold on, and this might come to an end very, very quickly here with a very positive outcome. So this is what I wanted to tell you today. I want to thank you for being here. We went a little bit longer, but I think it was good to do it. And I just saw what Rusty is saying there. No short. Not short, I'm long, but underwater now. Okay, now that I understand why you are projecting price lower, and that's why I asked the questions. Okay, so I wish all the best to you, but my fear is that we might go a little bit lower tomorrow into the 114. So make sure that your stop are hard stops, That's not what I wish to you, of course, but that's obviously I'm biased as well, so I have my outcome, but I also have experience from these levels and the way algos are positioned at this moment. So, Rusty, good luck. I hope to see you on Sunday, and hope to see you with a smile on Sunday as well. All right. So anyway, I want to thank you for being here today. I hope this was interesting. I hope it was useful as well. And if you have any questions, you can drop me an email at fibstalker@gmail.com. I'm planning for May to do a new session of my course, which will include additional material, as well as, if I continue my private trading room, also free access to my private trading room, which I trade in during the night and during the US session. So if you are interested, let me know. So thanks for your kindness and comments. Well done. I'll see you on Sunday for sure. We'll be there, FX Ambassador and FX Goldie. A great show. Thank you. You can thank FX Street as well, and for organizing this. And I actually join with you in thanking FX Street to set up this setup. And okay, so next is going to be Hohai Elam at 8 GTM, so don't miss that. And of course, don't miss the LAR with my friend Dale Pinker. Hi, Dale. Enjoy the LAR tomorrow, and thanks for the chat today. It was very interesting. All right, so thank you very much, and I'll see you on Sunday evening. If you're serious, be there. Sundays are very, very important. We usually get a very good kick into the new week, and very often there are also interesting positions to be taken at the Sunday session. So be there and see you. I'll see you there. Thank you very much, and see you soon then.